If you have rental property or an Airbnb, then I want to show you 5 questions I've asked HMRC and how the answers they gave me directly have to do with the amount of money you're paying them each year in the form of tax. So here I'm sharing with you the questions I've posted on the HMRC forums regarding expenses. The first question is, can detergent, soap, oil, coffee, etc. be deducted as expenses for my short-term let Airbnb? And as I mentioned, I'm an Airbnb host in one of my properties which I'm renting out, and I want to make sure that all of the expenses I incur to prepare things and buy things for my guests can be deducted off of my revenue, so I pay less tax at the end of the year. So items which are consumables or perishables, things that you buy for your guests to make their stay more comfortable, for example things like tea, coffee, soap, oil, all of those are expenses off of your pocket which should be recorded as expenses. And that's why I've asked HMRC exactly that. And this is my question. Hello, I let out my flat as an Airbnb and I tried to have the essentials stocked up for my guests. They can use the washing machine, use the shower, cook in the kitchen, etc. So a lot of these common for household products need constant restocking as the guests exhaust them. For example, laundry detergent, shampoo, soap, coffee, oil, sugar, salt, bathroom, kitchen, cleaning products. Can those be added as an expense for running an Airbnb? Thank you. HMRC came back saying, "Hi Clement, in accordance with PIM 2010, the wholly and exclusively test, any expenditure incurred solely for the purpose of a business or a trade is allowable as an expense against your rental business." And I'm going to show you what the PIM rules are. Over here, they've given us a link, so if I click on this one, PIM actually stands for Property Income Manual, and it's a set of guidelines that HMRC have created for property renters to test the circumstances whether an expense can be recorded or not as a business expense. And here we can see the PIM 2010 rule, which we got in the answer for our question, and it states that you can record an expense as a business expense if that expense covers things that are entirely for the business. So for example, there'll be an entire box full of coffee pods. If half of those are going to be used by your guests, but the other ones are going to be used by yourself when you go in your own property, then that's not wholly and exclusively. So you cannot record the entire box of coffee pods, and therefore that cannot be recorded as a business expense. However, if we scroll a bit down, you can see they've got an example here called a dual purpose expenditure. Strictly, if an expense is not wholly and exclusively for the purpose of the property business, it may not be deducted. In practice though, some dual purpose expenses include an obvious part which is for the purposes of the business. We usually allow the deduction of a proportion of the expenses like that. So for example, this can be utility bills, any energy payments you're making towards electricity, for example. In one of my other videos where I show you how to use a free template I give you for your property tax, you can see me recording electricity expenses, just a proportion of those, where I calculate the occupancy rate, so how long the guests have used the property, and then I use that percentage to calculate what percentage of the electricity I can use as a business expense. And this is where the dual purpose expenditure comes in. I'm deducting only a proportion of the expense that is only applicable for the business running. So if we go back, that pretty much answers our question. It's pretty much applying the whole and exclusively test. That means if we buy coffee, oil, sugar, shampoo, and laundry detergent, we just want to make sure that they're wholly for the guests. So you're not really allowed to use them, and you want to make sure you can buy something separate for yourself and you're not using the business expenses for your own stay at your own property. It does sound a bit weird, but you need to get your head around it because you need to be treating those expenses and those items as a separate entity while you're not in your property if you're renting it out. So make sure all of your expenses pass the wholly and exclusively test, and that way you can record them as a business expense and end up paying less tax at the end of the financial year because you can take them out of the revenue and have less taxable income to pay tax on. Make sure to subscribe to the channel so don't miss out on any other helpful videos. Good luck with your rental property, and I'll see you again in another video. Goodbye.